Good morning, everyone. I hope you're having a great day. Thank you for taking the time to join me within our daily GameStop technical analysis and options chain overview. Today, starting on our 15-minute chart, we'll notice that we traded at perfect equilibrium today, up 0.26% during regular trading hours and down 0.22% after hours. However, even though the price has remained the same, our technical setup is, much different than it was yesterday. So we're going to take a look at that first within my personal technical analysis style, using a lot of ICT principles, as well as the roaring Kittinger indicators as well. Coming to the conclusion today that I personally prefer my indicators short-term, intraday, and then the roaring Kittinger indicators have become quite helpful on that longer time outlook for us. With that being said, starting today, again on our 15-minute chart here, we had our bullish order block formed yesterday off of a break of structure late afternoon. We said in yesterday's video, if we can hold the break of structure, look for a continuation today. If we lose that break of structure, we're going to retest our order block. We're going to retest the sell side liquidity. And we have exactly that with, quite the reaction off of it back to the 4-hour negative order block, which is still holding true. So that's nice to see. Getting that retracement to the order block is perfect. When an order block is formed, traders, day traders, momentum traders, I should say, are looking to take longs at the retest of that. And we see that here. So a lot of longs are entering here today, and their stop losses are going to go below that order block. On the same note, we have that sell side liquidity accumulating not only stops for the long side, but potentially new shorts that will open when this breaks as well. And the buy side liquidity obviously acting in the opposite fashion. It's just a pool of either sell stops or buy stops, right? Resting either above or below recent swing highs or lows, equal lows or tops, and of course, obvious supports or resistances, right? You can think of them as supply and demand, more simply put, if you will, but they're a little bit more complex than that, as they are signaling those liquidity levels. So, aside from that, I guess, I've been rattling off some of these terms for you, and it dawned on me that you may not be familiar with them, right? So just going to give you some definitions of them, probably continuously as we go through the videos. That's our buy side, sell side liquidity. I also want to talk about, since we're talking about it today, our order blocks. In this case, it's a bullish order block. It's going to be the last bearish candle or small bearish cluster of candles before a strong impulsive move that's going to break structure, right? And that's a break of structure, and we seen that play out yesterday, right? And then it's going to mark where institutions likely accumulated long positions, and that's why they're so heavily defended and so easily usable and reliable, right? And again, that's why I gravitate towards them. So, 15-minute chart looking pretty good, right? Of course, we do have to invalidate these local buy sides, right? We have kind of a longer term one, and then starting a new one here as well, because there's a lot of stop losses for shorts above it, and there's a lot of new long orders waiting to enter on that break of structure as well. So some fresh liquidity above these areas if we can get there, and I think that's a big reason why we haven't gotten there yet, but things look good. Moving on to our 1-hour chart, we have here, I'll just use the top chart. Our buy side liquidity at 27.27 to 27.47. Look for shorts to defend this zone. Their stop losses will be in this area or above this zone. Breaking above it should give us another step up. Basically, everything I was just saying on a longer time frame here, right? We have this buy side where rejection, 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 and you're going to see that continue to take place, right? However, the more times we reject and continue to consolidate underneath, the more likely it is that the next time we will break up and above, at which point, we unlock that fresh liquidity, get our next leg up, and we can continue this song and dance. So into our 4-hour chart here, there's not too much happening, but this is nice. This is new. This is fresh. We have this 4-hour negative order block, which we've talked about in the last couple videos, if you're following along, invalidating that today, right? We get above that, which is pretty cool. So converting it into now a bullish breaker block, which is a failed bearish order block, flipped to support after the market breaks structure upwards. It's the other side of the order block that got invalidated, then later becomes the level price respected on a pullback, right? So we see that respected in this fresh pullback, and we're right back to it. And a really good example of this to show you is on the 1 day, because we just had this, right? And again, we were talking about this in real time. Well, it happened. How we had this negative order block chilling, and then we broke through it, retested it, respected that level, and then expanded upwards, right? So we're trying to do this exact same thing, right? This was the negative order block at the time, breaking through invalidates, converts it to a bullish breaker block, and at that point we retest, respect, and go, which is awesome. And then to go back to the 4G, the 4-hour, we can see that again here, how we have this bearish order block, we break through here, we retest here, respect that level, which was today, and then, kind of expanding out of it immediately, which is the exact same thing we did. Right, I can just put it on the bottom screen to compare it easily. Right, we retested and then immediately shot out. So we'll see how this pans out. There's a couple things potentially pushing us down here that weren't here. But again, just like how we broke through the 200, which was acting as resistance, kind of freeing us upwards, so too do we have those liquidity areas, right? The buy side. So moving away from that, some scary candles here potentially on the 1 day. Potential hanging man here. Today, getting that wick above and a little bit of volume to the candle is a little bit better, and it's just, not great. Showing indecision, right? Are we going to break higher, or is this it? And, typically these candles would scare me. However, we are still respecting our volume imbalance that we made the other day. So that's fine. Like maybe it would retrace back to it and go. However, we just had that retracement. So I think it's kind of just like, and not necessarily an indecision candle, but a patience candle where, the buyers aren't necessarily going too hard, but the sellers are not really getting after it either, right? And we're all just sitting here holding our breath, waiting for the ex-dividend date to hit. Some thoughts on that as well before we get into the Roaring Kittinger technical analysis. First off, on our 1 day, before we even get there, we're almost setting a golden cross for my exponential moving averages. That's when the 21 and the 50 cross over the 200. Signals continued trend strength for an extended period of time since we're on the 1 day, right? So that's really nice. That should set tomorrow or the next day. Again, before we get into those other charts, 5.38 million volume on the day, our average at 9.36. So the low volume kind of aligns with the indecision candle, right? Where nobody's really doing anything today. The market as a whole, because, that does matter, was up a little bit, similar to GameStop. So just kind of trading sideways. So no relative strength there on the broader market, but no weakness either, which is good. And What else did I want to mention here? The golden cross, the volume, and then the order block. Yeah, okay, that's all of it. So that's allowing us to move now into our roaring Kittinger chart, which, since I'm using it for the longer term technical analysis, the multi-day, not much is changing here. So we have our average cross yesterday / today, confirming that, which is nice. And probably in a couple days, like I imagine this is going to, maybe even a week this could take, depending on the price. Obviously, the higher the price is to the average, the faster it will curve up, right, to catch up. And rather than it just consolidating, right, it'll take longer for the longer averages to catch up. However, we, just like we're going to have potentially the one-day golden cross, on my averages, the kitty cross is potentially setting up in the next week or so as well. Now, the differences here is simple moving averages and the time of them. They're using 20, 50, and 100. I personally use 21, 50, and 200. So a little bit different, but the general principle, again, is going to remain the same, where we're looking for a reversal signal, pairing that with a key level breakout, and then a trend retest, right? That's exactly what we want to see here and what we have. Then just looking to fill the gap 2840, right? Hopefully that comes this week. If not, I don't know. I've been looking for it for a couple weeks. On that note, we have the RSI trend still holding. Maybe we could get a trend retest again before our final displacement upwards. If not, just get after it. That's fine. And then we have on the bottom our confirmed flip of our MACD, which is nice, our second day green. Let's see these bars grow, right? To get some momentum, because our PMO is starting to slow down, specifically on the 4-hour, right? Where we reversed back bearish. However, our signals have crossed again, so there is potential hope here that it was just a retracement. We're good to go again, and that 4-hour resetting back bullish will allow the 1 day to continue, right? And get some more out of this as we'd prefer. On that note, if I have anything else to talk about, the cross, RSI, MACD, OBV is still trending above its average, which is nice, if I can find that here, right? Our on-balance volume is above its average, which is nice. Good things happen when we do that, showing some inflow to the stock, right, rather than outflow. And the PMO still looking good, right? So that's kind of what we have for the Kittinger charts. There's not much for us to look here short term, as the indicators that they have set up are really flipping back and forth quite quickly, right? But long term, they seem to be quite trustworthy. So, again, spending, maybe about a month now with them, and looking again to spend some more time checking in on these every day for years, at which point we'll be an absolute wizard at it. And on that note, I don't expect, we have these warrants coming out. I don't think the warrants get exercised until they're in the money. So I think this price trend will continue until the warrants are in the money at 32, at which point people will start to exercise them, which is dilution. And we don't have warrant terms out yet. They're going to come out and they're going to say if the price is above 35 or 37, I don't know. They're going to let us know. For X days out of 30, there's going to be an early expiry clause. So people will not be able to diamond hand them forever. There's going to be a ceiling on these where it's like the price is trending upwards, upwards, upwards. We're above the strike, upwards. People start exercising upwards, upwards, upwards. The early clause kicks in, and anyone who didn't exercise gets nuked because they're going to expire worthless, right? Because they're no longer exercising in October of next year. They're like maybe December or January this year. I don't know the time frame of all this playing out. I just suspect that will be what happens. Now, that is going to kind of set us up for a situation similar to the bonds. And now that's honestly what I think is happening, or is where Ryan showed us what to do with the bonds, right? Where, we are increasing the cash on hand for GameStop, which is great, through the short side liquidity. We need to wait until we have the volume influx, right? At which point We'll be above the warrant strike price. We can all exercise, which is good. Getting, some money to GameStop during that high is going to be really good. And then, the price after that, liquidity influx will fall as it always does. Sorry to be the bearer of bad news. But we're going to do it again, and we're going to do it again and again. That's my opinion on all of this. It's about incremental wins. We've seen it with the bonds twice. Now we have the warrants. Time will tell, right? And again, we still are waiting for the information to further develop a plan. But right now, we're just chilling. And one thing you need to know is you don't really have to do anything with your warrants if the strike's below 32. You just got to chill out, baby, and hang on to them. So aside from that, we can talk about the options. I'm trying to make these videos quick, but they just get longer and longer. Max Payne, chilling, 25.5. Our put call ratio is dropping a little bit. It was at 0.6 or 0.61 yesterday. So becoming a little bit more bullish, but not by much. A lot of 30s, which are fine, whatever. But these 45s, these 40s, these 35s, who is buying these? I get you want to sell these for some short-term cash, some covered calls, whatever, but someone's still buying them, right? Throwing their money away. That's all I want to say there. We have maybe some options education that we'll go through in the future once things do settle down, because again, we've got a very long runway planned for this channel. A lot of 30s on the volume. 28s are not, I really like the 27s, 28s. Good volume here. If we can get above 28, things look good for a slap to 30 and a reject down, but we're midweek, and I've been saying this for how many weeks? Come on, bro. Could you be right one time? But a systematic walk up, $1 a week, I'll take it. I'll see you all at 28 next week, right? And then 29 the week after, and 52 weeks a year. Woohoo! Let's go. That would be ridiculous, right? But at least, walking into the early expiry clause price, right? And then, we can readjust and maybe take note of everything we've learned here on the options chain side of things. What strikes have been working, what strikes haven't, the specific expiries, and then we're going to apply that to the next warrant walk up. Things become a little bit more fun. And, I don't know the math on top of my head. But you could do this on a calculator. It's 4,000% one time or 40%, 10 times, right? So the compounding of smaller moves is going to, in not very much time, outweigh one larger move, right? And personally, I'm a young guy. I got plenty of time, and if, people can learn this and master it, it's going to be better for them in the long term than just, oh yeah, we got to squeeze 4,000%, I win, one and done, and now what do you do with your whole life, right? Not that would be bad. I would very much appreciate that, but I do think that the compounding of these smaller, consistent moves are not only safer because they're easier to play and read, but in the long term will outweigh the big move gain-wise. Again, so much rambling today. My notes, near term, the 3rd, the 10th, the 17th, clusters at 27, 28, 30 are our standouts. That's going to be our near term call wall ladder as we, convert the next one into support, right? 27 was the wall, but now 27 support. 28's the new wall. 28's going to be the support moving forward each week, it would appear. Open interest shelves, the heaviest around 25, 26. Across weeks with downside to the pin floor area. Implication of this, above 28 with momentum, dealers are likely short gamma, will have to chase/hedge, and that's going to push us into that 29-30 potential slapdown or the next wall. If we stall below 28 or we chop and pin, look for 26.5, 27.5, a clean break over 26.5, especially on volume, below 26.5, I should say, can pull us towards 25 or that put shelf, which is unlikely considering all of the call side multi-week, right? And then current catalysts have you, and specific technical setup, right? So a lot of things aligning for that not to really happen, but again, it's part of the equation. We should mention it. And then we can get into our mini leaps here, which, it's like quarterly, so not that far away. A thick ladder, 20 to 30 calls, that 25, 20, and 30. Puts are sizey around 20, 15, and 10. Longer near-term floor band, but this was so long ago that it's basically irrelevant. And now we can really just say they're 25s and 30s, specifically if we can break 30, which due to a couple financial engineering situations, I think potentially will happen, because not only do we have warrant hedging to the upside, but we also have now a delayed bond arbitrage. That short side needs to adjust their hedge as the price climbs and potentially unwind it altogether if we do reach that 37 for 20 days of 30 area. So, we're all waiting for this catalyst to happen, but they're already there, right? And there's nothing that anyone can do about it, it would appear. However, I've been wrong plenty of times before. So the read on this: structural positioning supports the 20 to 30 corridor, rallies into 30, 35, can meet rollover and cover supply with these leaps. Obviously, they would be interacted with if we got some price movement. And then real leaps, not just these quarterlies. They used to be leaps, but they're a little early to expiry now. Concentrated 25 call, 30 call, 35 call really is the big standout here in the open interest. But the 37s today hitting, and even the 50s hitting today, which, if you're going to play out of the money, you heard me talking trash about these weekly and next weekly out of the monies, just pure lottos. Like, you guys are crazy. But, it's one thing to throw $20 away on these lottos. To start throwing 200 and 2,000 away on these lottos is like, how much are you making that you can just burn that money willy-nilly week after week? It's crazy. Anyways, I like these a little bit more, right? They've got some time. They're still out of the money plenty to give you a runway. Obviously, I like the 35s much more, but as far as buying out of the money, buy time with it, right? And then, you're not going to get burnt immediately. And then you can reassess along the way, right? Maybe your biases have changed, and instead of having your contract be roasted to negative 90% in a week, because you had one bad day, because the market retraced because Trump said something, it just could be anything. It just gives you time to make the appropriate choice, right? Anywho, they'd be more expensive, and it's risk reward. Higher risk equal lower price. However, that comes back, and if it does work out, they'd pay out big, but the chance of them paying out is incredibly unlikely. So, these are okay in comparison to like these 45s that we see bought, like specifically on the weeklies, like 3,045s today. What are these even worth? $4 each. Okay, they're cheap as dirt. They're literally worthless. But lottos, you want to throw $20, maybe $100 at them to be disappointed and learn your lesson, by all means, go ahead. And on that note, okay, so, typically that is the hard rule. There's a corporate catalyst. There's a potential ramp built in the options chain. If there ever was a time to do it, it would be now. But I still hate it, right? Maybe we'll take some lottos tomorrow. I don't know. Not much, though. Just don't bet the farm. If you do play anything out of the money, size down. The positioning needs to be much, much smaller. And anyways, without rambling too much more, this video is brutal. The simple game plan from the ladder will be a bull path. Hold on to, above 27, 28. We're going to probe 29, 30. Acceptance above 30 is going to open up 31 to 33. There's thin air here until the next meaningful open interest at 35. So that's why we do expect those slaps down. Bear path, if we're going to lose 27, magnets at 26 to 25. Only turns riskier if 25 breaks or accepts within its consolidation, doesn't just retrace back out of it. The pin is risky with a weekly close near 27 and 28, which is likely, honestly, unless a catalyst knocks us off the ladder. But again, that catalyst might just be required hedging on both sides, the warrants and the bonds. Aside from that, cost to borrow is down, shares available is down, utilization is steady, and short interest is flat as well. So not really much changing there on the data side of things, right? We were at 0.78 yesterday, down to 0.5 here. However, the shares available is down. Rebate is chilling as well. So I'd like to see that rebate get absolutely evaporated. I'd like to see the borrow rate climb, and the shares, the shares available to borrow be gone as well. If you have any other questions, other concerns, things you'd like covered in the future videos, please don't hesitate. Hit me up in the comments. Most importantly, have a great day, and I'll see you all soon in the next.